Thank you. Well, Kayla, it's another trading day in 2025. We see the year is moving along just fine, but let's get to the top stories that set to agenda now. We're seeing oil prices, we continue the downward slide for the second consecutive session today as a technical correction followed last week's rally. That's weighing on the market where predictions of ample supply and a strengthening dollar. We see Brent crude futures that jumped about 28 cents, dropped there $76, 2 cents a barrel. US WTI, that's the US grade there, 0.45% down, still holding above that $70 psychological level. Last week, both benchmarks enjoyed 5 consecutive days of gains, reaching their highest levels since October, fueled by hopes of increased fiscal stimulus to boost China's struggling economy. So all eyes still on China, even in 2025. Well, let's look at the FX market now. We see the week kicked off with a bearish tone on the NFM window as a healthy supply of US dollars. That kept pressure on the exchange rates. The NFM, that hovered between 1,530 Naira to 1,537 Naira. So we see mostly unchanged for the NFM window. NAFEX, 1,542 Naira. That was a close from 1,543 Naira. CBN rate, that's stable there at 1,535 from the previous rate. Analysts expect rates to hold steady at these levels even today. Let's get a check on the Treasury bill secondary market. Now, that kicked off with strong activity driven by demand across the curve. Early trading saw November, December 2025 OMO papers take the lead, with transactions occurring at an average of about 23.60%. As the session unfolded, focus shifted to the shorter end of the NTB curve, particularly for the March-April 2025 window. Trading volumes were subdued due to wide bid-ask spreads. Looking ahead, analysts are saying a quieter market is expected today as participants remain cautious in anticipation of Wednesday's NTB auction. All eyes on that NTB auction. That's coming up tomorrow. So that's what's playing out for that market. All right, to other stories now. The Aba Power Limited, that's the electric distribution company serving Abia State, has announced a substantial increase in its electricity tariffs, with rates soaring by over 50%. The new tariff rates came into effect January 1st, 2025, following an approval from the Nigerian Electricity Regulatory Commission, that's NERC. The company made the announcement on its official X account, where it provided details of the revised tariff structure. The company had applied for a tariff hike on December 11th, 2024, and the request was reviewed and approved within just about 26 days. Under the new structure, customers in Band A feeders will now pay between 219 and 241 Naira per kilowatt hour, a significant rise from the previous 99 Naira per kilowatt hour. Band B customers will be shared between, they'll be charged 180 and 203 Naira per kilowatt hour, while Band C feeders will face rates ranging from 145 to 205 Naira per kilowatt hour. I would say the Yuletide celebrations may be over, but the cost of major food items in most parts of the country remain on the high side within the first week of the new year. This comes amid the expected impact of the 180-day or 150-day tax waiver on food import, which was announced by the federal government in the middle of 2024, as well as drop in petrol prices by the NNPC, Dangote Refinery, and other major petrol marketers across the country. In this report, we examine the reaction of food commodity vendors to these announcements and the expectations for the prices in this new year. Take a listen.
Nigeria's food market has demonstrated resilience throughout the years in the midst of economic headwinds, such as inflation and supply chain disruptions facing the country. At the popular Mile 12 market, known as the vegetable hub of West Africa, some of the vendors acknowledge that while there has been a reduction in the prices of ingredients such as tomatoes and pepper, high cost of transportation still poses a major challenge for both farmers and vendors.
The cost of fuel price, definitely I will tell you that it is not reduced from what people are expecting. And it is one of the reasons, or one of the major problems that we, our businessmen, are facing, especially that we are supplying food from various places across the board, across the country, supplying food items from northern part of the country to the southern part of the country.
Elsewhere at the Daleko market in Mushin, the report is quite similar, with many vendors lamenting the impact of the subsidy removal while citing that they have not felt the impact of the 150-day duty-free import window for food commodities by the federal government, particularly on some staple items.
When we talk of tax on any food commodities, is a lie. There's nothing like that. All food are so expensive. If you want to discover my lie, you can go to companies. A lot of companies that used to give their customer half bag, one bag, they cannot be able to afford it.
However, renowned economist and CEO of financial derivatives company Bismarck Rewane explains the factors delaying the impact of the import waiver announced by the federal government, as well as the reduction in petrol prices.
In spite of the duty waiver, we have not seen that reflect in domestic prices yet. But one of the major reasons that were given for prices declining was consumer resistance, and that the consumers are pressed by income. One, they spent all of their money in December for Christmas, so they have little or no money left. You will not see this begin to reflect until you see the January inflation. The inflation numbers that are coming out in the next week or so will be for December inflation. The January inflation numbers that will come out in February will now begin to show a sign of moderation in those prices.
It's just a few days into the new year 2025, and Nigerians are optimistic that the cost of food items will become more affordable in the coming months, as they expect that government's latest initiative and lower fuel prices will drive down costs eventually.
All right, let's get a check on the commodities market now with Mr. Bismarck Rewane, MD, CEO of Financial Derivatives Company. Great to have you on the show, sir. Good morning.
Good morning, Ladi, and thank you for having me.
Yes, sir. So from your comments in the report now, 2024, we saw a couple of moves from the government to bring down prices of food. We saw that 150-day window for free importation of food items. But now, we're getting reports that it's not even been implemented, in the first place. How are you seeing that?
Well, thank you, Ladi. I think, first and foremost, I did say on another channel that 2025 is not a year for the faint-hearted. It's a year in which we will wiggle, we will struggle, but we will get there, but after a lot of challenges. So I think we'll start off by saying that January is going to be very different from December, in the sense that, one, we have seen the exchange rate stable at about 1668 to 1680 in the parallel market, because people are going to buy dollars to go back out. We also begin to see price resistance from consumers who have actually burnt out all their cash. Yesterday's survey showed very clearly that a lot of items actually declined. The items that prices declined were beans, palm oil. Palm oil was down by 8.3%. Beans dropped by almost 8.11, and vegetable oil actually dropped by 15% from 23,000 to 19,500. Milk dropped from 4,500 to 3,800, and those are notable declines. But we did see some increases. Among the items that increased, generally speaking, Irish potatoes, which went up from 170K to 250,000, an increase of 42%. And we try to ask ourselves, and one of my colleagues is going to be talking about that on Business Inc., why are Irish potatoes increasing in price? One, the problems in Jos and Plateau, but two, I begin to see people who are buying burgers with chips, fish and chips, chicken and chips. So it's becoming a new wave of using chips as against plantain, that is potato chips, as against plantain and against yam chips. So that swing, because the price of potatoes were relatively stable in the last year, have now seen a surge in that direction. But generally speaking, I think that we are going to have a very interesting first quarter. I think that the inflation numbers that are going to come out, like I said on the news at 10 yesterday, are going to show some moderation, but those will be the January numbers, what's going to come out for the next inflation data that's going to be published be that of December. In December, we saw the price increases because of the festive season. But having said that, the price of petrol is down, the price of diesel is down, the price of kerosene is down, and therefore the transportation costs are going to be lower. And we're going to see a big differential between urban and rural inflation because that movement of goods and logistics costs, which has been pretty high, is going to kind of stabilize.
All right. So, Mr. Roddy, still looking at this, 180-day window for, free importation of some of these foods. I saw a report on Business Day saying that the Nigeria Customs is saying that the Ministry of Finance did not provide, the list of importers and their approved quotas to, facilitate the importation of these basic foods. So I'm wondering, would we have seen a difference, in prices if this window was truly implemented?
Well, you see, we say out there that bureaucracy is the enemy of efficiency. So what has happened is that the Minister of Finance and the economic team have actually come up with a plan. But what has happened is that bureaucracy has stalled it, but also opportunities have taken advantage of this to create shortages. So what were we seeing? We saw the price of rice decline, but it's gone up back up. We're seeing this, and there's a big difference between the price of perishables and the ones that are being imported. But I think it's a monumental disaster if we couldn't take advantage of it. And that window officially should have closed by this week. But I think, and I believe that the government will extend that window. But as long whether the window is open from now till forever, until the bureaucracy is out of the way so that people can bring in these commodities and at the same time pass on the price benefit to the consumers. Don't forget we are in the planting season. So now we are going to be having food shortages between now during the planting season. And next time you will get the big swing or drop in prices will be during the harvest. This will be a major problem because the aspiration of getting inflation down to 15%, which was announced by the federal government, may not be met. And first and foremost, I don't think that was going to happen. Our projections are for 27%. So even to get down to 27% will require a lot of work. And that work means that we have to get rid of the bottlenecks in the system. The major bottleneck is bureaucracy. The second bottleneck is speculation and gouging of customers. And the third bottleneck, actually, whether you like it or not, are the leakages in the system, the bureaucratic, the leakages that people make money out of it at the expense of people. The beneficiaries of injustice are quite more than the beneficiaries of policy.
Because I'm wondering, at one point, will Nigerian consumers get a break? Because we're still seeing projections for January. It seems food prices might still stay elevated.
No, I think that the prices begin to moderate as January happens. But between January and February, and traditionally, over the years, over the decades, January is always the time when prices fall. Why? Because people have finished all their money in December. They spent even the money they didn't earn. 2, January they pay school fees. 3, this is the time when you've just announced that there's an increase in electricity tariff. Very likely and almost imminent that there'll be an increase in the telecoms tariff. Even though these things, the increase in tariffs in electricity and telco is going to lead to increased productivity, but the lag between when the prices go up and when the impact is felt is going to be a bit long. So, like I said at the beginning of this program, 2025 is not a year for the faint-hearted. You've got to be strong, you've got to be resilient, you've got to have some capacity to withstand the shocks, especially with the strong and strict budget constraint. People are going to switch and substitute from one type of good to the other, and many people are just going to cut back on their expenditure. Definitely, it's going to be a tough quarter, but it's going to be a better quarter than this time last year. This time last year, we were in deep trouble. Now we are in what I can call mild trouble.
So, Mr. Ronnie, do you see some kind of light at the end of the tunnel, or is it a freight train coming at consumers?
No, I see light at the end of the tunnel. In any case, we project that there will be growth of about 4% this year compared to growth from about 2.5 a year and a half ago. So growth is everything, and that investments begin to come in. But I don't want anybody and all of us to be swayed or carried away by this misguided enthusiasm that things are going to turn around very quickly. I think the worst thing to do is to have a crisis of false expectations. Let us be very intentional, very strategic, but very measured in what we do and what we expect. Remember, talk is cheap. People are going to be saying all sorts of things. But if you, there's a big difference between analysis and propaganda. So we are going to have to stay our way to be on a really realistic path. And that's what I'm emphasizing this morning.
Talking about expectations, what are you seeing for PMS and diesel prices in 2025?
I think, to be honest, and I have been extremely objective here, if the differential between the price of petrol in Nigeria and the neighboring countries widens, then we'll go back to where we are. So for now, there's a price war. For now, there are efficiencies that are being passed on. So I do not think that the price of petrol will drop below its current level of about 900, which is the price that Dangote is selling to retail wholesalers. So, but I think that in the first quarter, we'll sit at about 935, right now you have 935, 975. But at the end of the first quarter and early in the second quarter, we'll begin to see it go back up towards 1,000 naira, because global oil prices, as you see today, Brent is already at $76 a barrel. The exchange rate holds stable. So I think that the fact that it is not falling, that the price of petrol is not increasing sharply is a win. And the fact that the Dangote refinery has helped stabilize things and is actually what we call the Nigerian white knight. It's like a Hail Mary pass in American football. That has helped Nigeria. 1, quality. 2, guaranteed quantity. And 3, encouraging as a price leader to ensure that these products are well priced and efficiently priced. And at the end, the benefits are being passed on to the market and the consumers. Consumers need a breaker. They need it so much now because they're falling, there's income poverty and there's multi-dimensional poverty, which is actually choking Nigerians right now.
All right, Mr. Moroni, I hope we get more Hail Marys, in this 2025. Thank you so much, Mr. Bismarck Orani, MD, CEO, Financial Derivatives Company.
Thank you for having me. Happy New Year.
Happy New Year. We'll take a break now. When we come back, we'll get a check of what to expect for investment opportunities in 2025. That's in a moment. Just stay with us. All right, as 2025 moves along, Nigeria's investment outlook offers both opportunities and challenges driven by macroeconomic trends and ongoing reforms. Key sectors like energy, technology, agriculture, and finance remain attractive, while inflation, regulatory changes, and political stability are crucial factors to watch. Well, join us for this conversation. We have Mr. Egie Akpata, who's the chairman, Skymark Partners. Great to have you on the show. Happy New Year. Okay, you might have to unmute. I see your mouth moving, but I couldn't hear you.
Happy New Year, Ladi.
Fantastic.
Thank you for having me on the show.
It's great to have you. So, what are the expected trends in, Nigeria's stock market that you're seeing, your crystal ball is showing you for 2025?
Well, I think whatever predictions people might have had last week might have changed given the activity you see in the insurance space. A lot of insurance companies are up 30% already this year, so that's very unusual. But again, that might be a sector worth looking at. But I think by and large, banks are still where the action is simply because of their relatively low price to earnings ratios and their high dividend yields. So banks that have high earnings growth and a high dividend growth are definitely a safe place to be. But overall, I think there's always somewhat a price discrepancy in this market where low price stocks tend to do better than high price stocks half of the time. And we're seeing that with insurance, and that might apply to a couple of other sectors.
And you're talking about that insurance sector now. What would you say is the best strategy, to pick the winners? Because we have that recapitalization coming up for the insurance industry. We're going to have mergers, maybe acquisitions. So what are you seeing there? What would you say is the best strategy to pick the winners?
Well, I think it's a very tricky sector to try and play this in. I mean, we've seen this happen maybe a long while ago, maybe 2008, shows a lot of promise, and then, some people might be left holding the bag. So you have to be careful. There's some of those companies that are somewhat distressed that might have low prices, but might not have good liquidity if you have to get out. So you want to focus on the better capitalized, better run, more liquid stocks, which tend to be higher priced in terms of absolute naira priced, and so potentially might not give you the very, very high returns you see of those 1 naira stocks, or those even below naira. So you need to still focus on quality and liquidity.
So I guess at this point, you shouldn't marry any one stock in that sector. You have to be careful.
Yes, I mean, again, you sometimes have to have exit prices. So when you get to a certain price, even if the momentum is still there, you need to use that momentum to get out, because some of these stocks will have liquidity issues. And that's a common problem across the entire market, depending on how much you're investing. You always have to be cognizant of how you're going to exit, and if there will be liquidity in the market to take you out when you want to do that.
All right, talk to me about sectors that are likely to drive growth in the capital market. Is it the same, the expected culprits, financial services?
Well, it'll vary. I mean, the banks are always a good place to start. You might not get some of the very outrageous returns you see in some other sectors, particularly with the bigger banks. But you will get safety, you will get liquidity, you will get dividend yield. If you want to be a bit more excited, a bit more adventurous, then you can look at some other sectors like insurance we've spoken about. There could be some interesting activity in the FMCG space. Bear in mind that we had several years of depressed prices, and at this time, some of these prices are starting to go back towards their historical averages. A lot will change if foreign investors come back into the market. They've been more or less absent for a while, and the kind of stocks that foreign investors like are probably a place to target. So the high quality FMCG names are probably worth looking at right now.
Right. And I want to cast our mind back to COVID. Remember, that was the time we saw oil go negative. That's oil prices. We saw a lot of risk assets, fall like hot potatoes. And now we're getting reports of a respiratory infection. That's a pneumovirus, HMPV. Are investors and advisors getting nervous, with these reports we're getting about this new strain?
I'm not sure that you're going to get the same kind of effect as before. I mean, so yes, you have all kind of outbreaks. Normally in this time of the year, if you look at the US, this is their flu season. You have all kind of outbreaks of variants of viruses coming out. You're not going to get that kind of 2020 effect anymore. So I wouldn't really use it as a benchmark for making any kind of decisions from an investing point of view. Not a factor right now.
But if we're to imagine that, another pandemic is upon us, are we exiting all risk assets?
No, quite the opposite. I think that even if you had a pandemic today, the way it's going to be handled is going to be quite different from 2020. And so you just have to bear that in mind. And I don't think you will get that drop-off in risk asset prices anymore. It's kind of like once bitten, twice shy. You're not going to get investors dumping quality assets because of a temporary problem.
All right, we'll definitely keep our eyes on this one. But, looking at, the space, the investment space here in Nigeria, what would you say is that asset class that investors should really, really be looking at, in 2025? Are you seeing cryptocurrency, Bitcoin, as something investors should be looking at, at this time?
Well, I think in terms of, we've had this discussion before a few weeks ago. I still think that because you have very high interest rates in Nigeria right now, your 1-year T-bill is at almost 30%, at least in the primary market. It's hard to see the currency, falling, fast enough to justify staying outside a naira risk-free. So I think the best investment right now is probably a 1-year treasury bill at about 29.7%. The question is how long it will be available at those kind of levels. We've not had an auction this year, So we don't know, but I suspect that you'll be getting those very high 20s throughout Q1, and I think it'll be a good idea to accumulate those securities for now, because it's unlikely you'll see those level of yields in the second half of the year.
And, looking at, the currency space, we've been seeing stability, with the Naira. We did hear the central bank governor said the Naira has been stable since about June, July, of 2024. And it seems we're still seeing that stability, for the Naira. But is this going to be a different year for the Naira? Do we see some kind of strengthening at some point?
Well, I think, again, the strengthening has already happened. I mean, if you look at what happened in the month of December, again, historically, for 5 years straight, we've had currency appreciation in December. And last year was no exception. There was a big move from about 1670 to about 1530 in the official market, driven by a number of factors which will not continue this year. So we'll probably have seen the peak of at least the strongest point of the Naira for now. And you probably have a slight depreciation during the year. But again, given the level of inflation and where interest rates are, it'll be unrealistic to expect the currency to remain constant against the US dollar. Bear in mind, the US dollar has appreciated substantially against almost every global currency. I mean, if you look at moves, Canadian dollar, British pound, and the euro, those currencies have lost about 5 to 10% against the US dollar in the past year. So if Naira moves a bit from here, it will not be unusual.
All right. So is there a possibility this might be the year for the Naira?
Possibly. I mean, this will probably be the best performing year for Naira in the past 4 years. Now, best performing does not mean appreciating or no depreciation against the US dollar. It just means less depreciation than you've seen in the past. You're not going to see the currency lose half of its value in 1 year. That's not going to happen going forward. You might see a 10% drop in the official market. But I think what's more concerning is the spread between the official and parallel market. That had collapsed in the past, and now it's opened up to about 120 Naira, and it's still widening. So it's not clear why that is happening, but that's probably likely to continue happening unless the central bank pushes some money into the BDC sector.
All right, I guess so much for investors to look out for in 2025. Still early days. We'll keep tracking to see how it plays out. Thank you so much. And that's Mr. Ege Akpata, as the chairman, Skymark Partners. Great having you. Happy New Year.
Happy New Year. Thank you.
All right, that's the show today. Markets are open right now. We'll give you a summary of what's playing out on Business Incorporated. That's at 1 p.m. Thank you for watching. I'm Ladi Williams. I hand things over to the Sunrise Daily team.